Hello, fellow traders. 'Tis I, the Rumpled One. Monday, June 11, the year 2018. Let's talk trading. Why you do not get better at trading, part 13. Today's topic, FOBO. FOBO. Now, many of you know of FOMO, fear of missing out, but FOBO is, maybe we could call it a sibling. It's fear of better option. So what that means is it paralyzes you. It freezes you because you're afraid if you do one thing that maybe something else better might come along. So in a way, it's similar to FOMO, fear of missing out, but usually when you FOMO, it causes you to act. FOBO causes you to not act. It causes you to freeze, to not take action, to not enter a trade, to not use a system. It's funny, between yesterday and today, I don't know how many different invitations to seminars and indicators, slope divergence indicator, the some magical FIBO indicator. I mean, it's just crazy. Maybe I should do a video just show you all these different things that are out there. You know, all these people trying to separate me from my dollars. You know, pushing, hawking, selling their trading software and ideas. I just find it amusing. But FOBO, fear of better option. Now, there's one thing you're not going to FOBO about. There's nothing, better option for money and risk management. No, you see, it's real simple because you know your account size and you can determine your risk, how much you're willing to lose per trade. And that will determine either your position size or your stop loss. So it's pretty simple there. It really is. There's nothing to FOBO about money and risk management. Okay? I hope you understand that. So let's look at the monthly chart. Remember, I'm giving you these lines, these values that you should be thinking about when you're entering a trade, and it's based on the previous month's candle. So you see here we had green at the line at 109.32. If that was a wick zone, monthly wick zone entry, okay, you crossing that open. Then you had the midpoint here at 109.74. You can see we're at 110.05. So had you taken either of those two simple trades off the monthly levels, you'd be in the pips. Now let's look at the weekly. As you can see here, once again, you have that. We had a gap down on the yen. So here at the close, 109.44, it was green. Then at the weekly mid, 109.72. What was the one here? It was 109.74 was the monthly mid. So right there, crossing those. And once again, you see you'd be up. Now you're in this upper wick zone off of this doji. So price is gonna be probably between these two numbers for a while, unless it pops out here or comes down the other way. And on the daily, once again, you can see the open, previous daily open there was 109.68, green at the line long, or breaking out of the high, 109.84. And once again, you see these trades will put you in the pips. No fancy indicators, no squiggly lines, and really no analysis other than just knowing, the monthly level, the weekly level, the daily level, and just trading. And we're going with the candle color here. Very simple, monthly, weekly, daily, all green, heading in that direction. When we look at the buy zone yesterday, I think we were in the hour 4 if I remember correctly, but you can see here it just never looked back. You can see we hit the pivot there. Rat zone, there was here was an opportunity here to make some pips because the high was a little bit lower at the time. But you can see here, we've got a rat zone trade, red rat trade. Here we hit the weekly R1 and price reversed. Nice place to go short. Once again, the pivot was hit. Daily R1. Daily R2 is right there. And right here we go. Price action. 1 ball, green at the line, good for 20 pips. 3 ball, I'm going to go red at the line here, which would be the 110.00. Or if you wanted to jump in early, you could just take it now. But as you can see, we're waiting. We had some selling, but now we've got the waiting, buying. So you just have to wait to time that trade. And here we go. Once again, looking at these lines using the TROHL5 indicator. People are asking how they can set this up. It's just simple, but I mean, it's not difficult at all. You don't even have to have the dashboard or any of that. You just pick your pair to trade. But you see, fear a better option might say, oh no, there might be a better trade, or oh, there might be a better pair to trade. I mean, you can paralyze yourself. You can wind up not doing anything. So I guess on one end, fear of missing out, you just keep jumping in because you don't want to miss out. And on the other end, you don't do nothing because you think there's something better coming along. I guess he can almost think about it like marriage, you know? You don't marry this person because you think a better one might come by and then you never get married. See, I never got married. But it wasn't because of that. That's something different and that's got nothing to do with trading. Or does it? Let me think. No, I don't think it has anything to do with trading. Okay, let's see. Wick zone. Price doesn't like staying in the wick zone. It was here, out of the zone, into the zone, out of the zone, dip back in, and is out again. So if you're not convinced by now, if you've watched these videos for I don't know how long I've been putting them out, that price doesn't like to stay in the wick zone, I don't know what to tell you. And we've got holo here, H1 setup on the M15 candle. Let's just switch over to M5. You can see right here, we had the highest open at a bull or bear candle close and tested the open here, and here we go, about 4 pips to the good at the moment. Once again, this stuff isn't difficult. And as you can see here, price action on the tick chart. Asking for feedback. Do you guys like seeing the tick chart, or should I not show this every day? Just curious. Oh, and by the way, somebody said I should do or suggested I maybe do a live stream broadcast of this. Yeah, it's kind of hard though because I'm doing other things. It's got the warm weather here, ranch chores. Maybe I could pick one day out of the week, pick a day out of the week and a time to do these live stream videos. Though I'm not really sure if there'd be any advantage to that. I could always crank up the Pal Talk chat room and we can talk, but maybe you just want to see my screen, maybe punch in questions or something. Now maybe I'll give it a try one day, but let me know what what day, what time. Remember, I'm on Pacific Coast time, so when it's 8 o'clock in New York, it's 5 a.m. my time, or if it's 8 p.m. New York time, it's 5 p.m. my time. So let me know what time, what day of the week. Maybe Sunday/Monday would be the best because then we could set up for the week. Maybe during the weekly open and gap, do that. But sometimes I do other things on Sunday, so I don't know. It's just hard for me to nail down a time right now, but we can figure it out. Okay, for the inventory reduction bars, you can see there was a long trigger here and a long trigger there, and they were both profitable. And as you can see, the daily pivot got taken out. Do I still need to do this chart, or do you guys trust the pivots being taken out for the most part? You can see here since March, or I guess all of 2018, we've only had 5 missed pivots. And you can see here missed pivots for the year. Looks like we've had 29 missed pivots. But you see, these missed pivots don't show up over here because they were missed on that day, but they were taken out. So you can see here we've got a 523, but we don't have a 521. Okay. And because it got taken out. You see right here, this pivot, there's the 524 pivot. See, the 523 is still open, but the 524 was open on that day, but it got taken out a couple days ago, got covered. And one of my trading charts or one of my entry charts here, and you can see here we've got this big bar. It's only about 4 pips long, 3 pips long, I think, but most likely price should come back out and take out that bar. You can see there's not too many that haven't been taken out. That's one of the things I'm looking for on the different time frames. I'm thinking maybe I'll do a multimeter indicator that says how many bars ago you got a big bar. But what I'd have to do is I'd have to either automate how big the bar needs to be or put it in by hand. You can figure that way you can do your frequency distributions, and you can either do modes or you can do max or 80% of max or something, whatever you want trigger wise. And if I'm not mistaken, I'm still working on this indicator, so it hasn't been released yet. Yeah, I'm doing 2 pip thresholds. That's basically 2 times the spread. So if the price moves 2 times the spread or more in a minute, I'm going to get a highlight, but only on the bars that are uncovered, and only on the body, not the range, but the body, open to close. And you can see here the Einstein line. That's when I turned the computer on right there, and it hit, and you can see what happened next. Simple stuff, so simple. I mean, but I show you, I don't know how many different methods in a day. You can pick one, but the thing is, fear of a better option might paralyze you. So, oh, I don't know if I should do that or not. There might be something better. So let me go look and try this guy, look at this guy's thing. And now let me go look at that other trader's thing. And you just get paralyzed. So try not to do that. Because, see, remember, it's not what you trade, it's how you trade it. So no more FOBO. Just get out there and drain the banks.